Hello, hello, hello. Okay. So if we go and look at the adjusted trial balance of Hodges shows data pertaining to the sales at the end of the fiscal year, October 31st, 2014. Sales revenue 900,000, freight out 14, sales returns 22, and sales discounts 13.5. We're required to prepare the sales section of the income statement. So what's the first thing we're going to do in preparing the sales section? Do I have that listed here in the classroom? I can't modify that just because it's... So in the sales section, we are basically going to start out with our Hodges Company. And we've got the income statement, partial, for the year ended October 31st, 2014. So we've then, the next step is, what's the first thing we're going to do? Sales. And what are our sales? 900. Then we've got, sales revenue here. 900. Then we've got less sales returns and allowances of how much? 22,000. $22,000 and less sales discounts of how much?
13,500. Those need to be in parentheses or no?
No, but what I'm doing here, so then we're going to show it as net sales. Now you can put it in parentheses, but technically no, because technically you know that these two items, you see how we show it as a less sales and sales discounts? Okay? Less sales returns and allowances. So we've got our little less right there. So our net sales here is $864,500. Now, this is a little tricky. Freight out, it's not freight in, is it? Freight out is a sales expense. It's not part of inventory. Freight in is going to be part of inventory, but freight out is not part of inventory. How are we doing? You want to do another one?
Yes.
Let's do 5-6. 5-6 tells us presented below is information for Zal Company for the month January of 2014. We got all kinds of information here. We're going to prepare an income statement using the format presented on page 245. Assume a 25% tax rate. Boy, they're going to really make us work here. So let's figure out what we're going to do here to get this information. Let me see how I can. There. View, edit document. Okay. So, five, 6. What are we going to start with here?
Revenue.
We're going to start with our sales revenue of how much?
377,000.
Then we're going to have our sales returns and allowances of how much? And our discount is how much? And so after 28,000 here, what is our net sales? How much? Close, 342. And then what about our cost of goods sold? $212,000. Which gives us a gross profit of $130. Now we've got our various operating expenses. Operating expenses. Salaries and wages expense. Rent. Insurance. Freight out. Freight out. Do you see that? Why is freight out not part of cost of goods sold? It's a selling expense. It's not freight in. It's not bringing the inventory in. This is selling the inventory. It's not part of cost of goods sold. I'm going to not trick you with a question, but I'm telling you this enough that you might have a question. Where does freight out go in the cost of goods sold statement? You're going to say it doesn't go there. It's a selling expense. It's a normal operating expense. Okay, freight out is how much? 7. So that brings us to our total operating expenses, 92, 104, 111. Net income before taxes is how much? 19,000. Income tax expense, what did they tell us it was, 30 or 20? 25. So 25% of 19,000, 4750 means our income is 14,250. Does that make sense? How are we doing? Okay, let's go back to the problem. And it says calculate the profit margin and the gross profit rate. The profit margin, how are we going to do that? The profit margin is going to be we're going to take our net income. What was our net income? 14,250. And we're going to divide that by what? What are we going to divide the profit margin or the net income by? Net sales of how much? 342? And that gives us 4.2%. Doesn't it? Yes? So our profit margin is 14,250, or our net income divided by our net sales. Our gross profit rate is going to be, what's it going to be, guys? Is it going to be our gross profit up here of 130 divided by our net sales? So our 130 divided by our net sales of 370 is equal to what? Yep. What do you think? Close, but a little too slow. It's 35. 130 divided by 370. Am I just losing it? 130 divided by, oh shoot, you're right, but you know what, I did it wrong. Divided by net sales. Would you believe it if I told you I did that on purpose? 342, guys, I'm sorry, not gross sales, net sales. Okay, we're always gonna use net sales. I'm sorry. What's it gonna be? 38. Guys, I'm sorry about that. So, what is the profit margin? Are you gonna know, what numbers do you use to determine the profit margin? The profit margin is gonna be on all expenses. The gross profit rate is just on your inventory. How are we doing? That make sense? Let's do 5-7. Financial information is presented here for two companies. Sales revenue, sales returns, net sales, cost of goods sold, gross profit, operating expenses, and net income. We've got to figure out the missing figures. How are we going to do that? Let's go and find let's start with Yannick here. And let's find our Yannick. What are our sales from Yannick? Let's look at the information we do have. Our sales from Yannick is what? 90,000. What are our sales returns and what else information does it give us? Does it give us net sales?
Yep.
How much? 84. And then if we know our net sales are 84 and our cost of goods sold, does it give us?
Yeah, 58,000.
So we know that our gross profit is going to be net sales minus cost of goods sold, which is what? 26,000. Guys, can't we figure out our sales returns and allowances? If our sales are 90 and our net sales are 84, what are our sales returns and allowances? 6,000? You see how we can use the fill-ins if we understand how the numbers fit into the big picture, how we can take that and go with it? So our gross profit now at 26,000, what are our operating expenses? 14,380. 380, which means our net income is what? 11,620. Right? You two boys, men, I'm going to let you come up and do the next problem. Come on, up. You kind of asked for it. You guys keep talking. Do y'all want to do it? If you don't want to do it, you better separate right now, because I don't want to kick anyone out of school. I haven't had to do it yet, but I will. And I'm serious. See, I'm really a nice person, but boy, I can really be a bitch too. Thank you. It's really, and thank you for saying that, but it's really annoying.
It is, I'm sorry.
It's okay. No, it's not okay, but thank you for saying it. Okay, Nunes. Let's talk about Nunes. What figures do we have on Nunes?
Sales returns and allowance,
What are those?
5,000.
5,000? And we've got, does it tell us what our sales is? Or does it tell us our net sales? What are our net sales? 100,000. So how can we determine what our sales, total sales are? Can't we take our 100,000 plus our sales returns and allowances? And we know that our net sales should be 105, right? Isn't that pretty easy? Kinda? Our net sales we know are at 100,000. And does it tell us what our gross profit is? What? I'm sorry? 40,000. What's that mean our cost of goods sold needs to be? 60. The key here is being able to understand how the different accounts fit into the big equation. So guys, as long as you keep like a template showing sales minus sales returns and allowances minus sales discounts equal net sales, you know, and then you go net sales minus cost of goods sold equals gross profit minus operating expenses equal net income. Do you see? If you allow yourself a template, it will start making sense how it fits in. Okay? Yes? No? Billy, are you understanding this? Billy, you didn't tell anything to Brandon, did you?
No, I didn't.
He wasn't in class the other day. I figured maybe he was real disappointed with me. You know that's not, it's not about me, but I just want to make sure you didn't tell him I'm favoring you guys over him. Okay, gross profit, 40,000. What's our net income? 17,000. What does that mean our operating expenses need to be? 23. So basically what we're doing here is we're just trying to understand. They give us some numbers, we're trying to fill in the difference. If you guys keep a template and keep track of how the numbers fit into the big equation, you're going to be right. You're going to be fine. Okay? Where was the one trick in this equation? What is freight out? It's an operating expense. What is freight in? An inventory cost, okay? That is a key. If I do anything, not tricky, but if I do anything that's going to be confusing on the quiz, it's going to be about freight. Freight in, inventory, freight out, expense. Yes?
Why is that again?
Freight in is a cost we have to pay to bring the goods to us. Bring the goods, to get the goods to us. So it's part of inventory. That's what it cost us to get this inventory. But freight out is selling the goods. Selling the goods is an operating expense. It's not part of inventory. We've sold our inventory. We're done with it. So freight out is going to be a cost of operating the business. Just like sales commissions, salaries, rent, all that. These are all expenses of selling it. Income, expenses from operating activities is freight out. Make sense? Am I kind of honing that in a little too much? Okay, next part. Let's go back. It's now going to ask us, calculate the profit margin and the gross profit rate for each company. Now, I bet you're going to learn the difference between profit margin and gross profit rate. I will probably have multiple choice for you that will show a scenario. And I'll say the gross profit margin is this. And you're going to have to figure out the gross profit margin is going to be the net income divided by the net sales, isn't it? But what's gross profit rate? Gross profit margin divided by net sales. Will the gross profit margin always be greater than the, will the gross profit rate always be greater than the gross profit margin? Or will the gross profit margin be greater than the gross profit rate? Which one is going to be higher than the other? Why?
I just looked at the numbers and saw that one was
Exact. Think about it like this, guys. If we've got, here's our toy car. Our gross profit here is at 150, and then we've got operating expenses of 100. So our net income is 50, and so the gross profit. I'm getting confused. There's gross margin. What are the two? Profit margin and gross profit rate. What's the profit margin? Which one is net income divided by net sales? Profit margin. So 50 divided by 200 is going to be 25%. And the gross profit rate is 150 divided by 200, or 75%. Do you see how the gross profit rate is always going to have to be higher than the gross profit margin? Because all the operating expenses haven't been taken out yet. Make sense? Yes? No? Awesome. Okay. So let's calculate the gross profit margin and the gross profit rate for each company. So if we go back here and go down, for the profit margin for Yannick, what were the sales? What's the net income of Yannick? 11,620 divided by the net sales of 84,000 is going to equal 14%. But what's the gross profit rate? What's the gross profit? 26,000, isn't it? You're looking at Nunez. Divided by 84,000 equals 31%. Do you see how the gross profit rate is 31, but the margin is only 14? It's because the margin takes into account all the operating expenses, but the gross profit rate only takes into account cost of goods sold. Okay? Are we doing okay? Nunez. What is the net income? 17,000 divided by net sales of 100,000 equals profit margin. What do you think? 17%. And the gross profit rate, 40,000 divided by 100,000 equals 40%. So if there's a question such as, which is going to be higher in a company, the gross profit rate or the gross profit margin? It's going to be the gross profit rate, because that only takes into account cost of goods sold. Okay? We doing okay there? Do we want to do exercise 5-8 and go through one more problem like this, or are you burnt out with these? How many are getting it? Good. Let's just do 5-11 now.